Hey everybody, it's Kyle Holloran, operating principal with the Alliance Group at KW. Hope you're having a great day. I'm really excited about this conversation. This year, the market's been a little bit different. There's been a lot of headlines, a lot of news, especially where some of our offices are located up right outside of Washington, D.C. And so today, really excited to be joined by two powerhouse agents that work the Ashburn, Fairfax locations. We're going to get their contact for information in a few minutes, but let me introduce a few people to you. So first, we're still with Paul. So Paul Bedewi. Paul is a founding member of Bedewi, Duke and Associates over at Ashburn. How you doing, Paul?
Good.
Good to see you.
Thanks for having me here.
Absolutely.
Yeah.
And then joined also from the KW Ashburn office is Kristen Develli from the Kristen Develli Group Real Estate over at Ashburn. Hey, Kristen.
Hi, Kyle. Thanks for having me. Thanks for being here.
Absolutely. So we had been talking a little bit about this topic, and I thought this was a conversation that we had to bring a little bit to the masses. You guys work a great location, high price points, a lot of people that are highly invested in their homes and the equity within their properties. And this year, with an election year and tariffs and DOGE and all these different things that are happening, I think what we're starting to see is a disconnect a little bit in the headlines to reality. Is that a fair statement, Paul?
100%.
Super
100%.
fair.
Yep. So we just wanted to kind of dissect this a little bit. You guys are sitting with buyers, with sellers on a weekly basis and explaining these things in a way in which they need to hear them so that they make good financial decisions as they continue to move forward. Does that make sense?
Oh,
Yep.
Totally.
Perfect. So Paul, you and I had a conversation that you were telling me about back in February that you had received an email, some sort of communication for somebody that said, hey, home prices are dropping. This is all because of DOGE and all the things that are going on. And very quickly you were like, that's not reality. Yeah. So talk me through that situation and kind of some of the things that have been happening in your world that leads to this type of conversation.
So I'm more of a data analyst type of a agent. And I had a client, very highly educated, CEO of a, government contractor, sent me a message. It was an article that said median home prices since the implementation of DOGE have dropped $130,000 in Washington, D.C. And that was in early February. And I said, fundamentally, that's not possible because just the statement is wrong, because anything closing in early February had gone under contract before the inauguration. Right. So it's just a fundamentally false statement. Mm-hmm. And so when it comes to data analysis and how we're guiding our clients, I'm apolitical. I don't have an agenda and then cherry pick data to tell the story I want to tell. I want to analyze the data to tell me the story so that then I can pass that along and advise my clients accordingly.
Great. Talk to us a little bit about how you do that, right? So what is some of the data that you've been looking at, been tracking this spring, and kind of tell us about, where the headlines are and then kind of what reality is in terms of your markets and the sellers you're working with.
Yeah. So we started at a high level of just, median home prices, what's happening in the market as a whole. And we try to take as much data as possible so that we can see trends out of it.
Sure.
Paint the picture.
Yeah, correct. So it's not like honing it down to like this one neighborhood. Like I want all of Fairfax County, all of Loudoun County,
right,
all of Washington, even the DMV area.
Right.
And so initially from that, so then I look at that and I go, okay, that question of what's happening, with DOGE or whatever is happening. I look at that and you go Washington, D.C., you go Arlington County, Fairfax County, Loudoun County. Every single location around the DMV, the median home prices have gone up month over month, February, March, April.
Right. Yep.
So fundamentally, the market is strong.
It's strong and growing, right?
Yeah.
Some of the things that we look at, especially when we talk about stats sometimes, right, is month over month and trending months from there.
Yeah.
I think when you say pick data that fits an agenda, we have a seasonality still in this business, right, Kristen?
Oh, absolutely.
We still see strong spring markets kind of leveling off, families going to family time when it comes to the holidays.
Yep.
Right? So talk to us a little bit about like seasonality. Have you seen that change at all? And isn't that kind of some of the reality around some of the early numbers that we see in January and February is more seasonality, not that any sort of major political decision is affecting home prices?
Yeah, it's interesting. Traditionally, I think our season probably starts, we'll call it mid-January. After the new year, people settle in. Mid-January, spring market.
Right.
And kind of runs through, I'd say traditionally, Memorial Day weekend. And then you kind of see people starting to check out a little bit for vacations. They want to take a break, traveling, and then maybe a little pickup when you get back from summer break. School starts, people get settled. You might see a little uptick in, we'll call it September, October, and then settles back down for the holidays.
Right.
I'd say the last couple of years have been a little bit different in the sense that spring market has kind of pushed through a little closer to the June, July, maybe into a little bit of August timeframe.
Right. Yeah.
But traditionally, you come into your January market and you start to see all of those upticks. And you can see it when you look at the trends year over year. If you look at January 2025 compared to January 2024, it's pretty consistent.
Right.
When it comes to inventory increasing, sales increasing, listings taken increasing.
Sure. Right.
All of those numbers.
I think you're right. I'm starting to see seasonality get pulled out a little bit. It's not as large as a bell curve as I feel like it used to be. And if you think about the types of people who have their homes listed in November and December, to reflect that early February sales data, Paul, that you had referenced, these are people that are highly motivated to sell. Right? Because they're listing their home during a season in which there are not the top amount of buyers potentially. And so again, we're going to see median home price start to kind of follow a trend line around seasonality. I think that's something to kind of, take into consideration in this conversation. Right. So what are you guys looking for, like outlook wise, Paul? Has this conversation, do you feel, we're a little bit later in the deeper spring at this point when this podcast is made, has that conversation started to tail off a little bit? Do you feel like the headlines are changing, or is that still something that you're battling and think is still in front of you the remainder of this year, even going into 2026 potentially?
Yeah, so we did feel that we saw a little pullback. We saw a little fear in the consumer. Even though the data, the real estate data suggests that there's no issue. Right. It's, perception is reality. So when the financial markets were dipping a little bit, we saw a little pullback. So when March and April are usually just gangbusters, it was a little slower this time. Right. Now the sky is not falling. And oh, by the way, we have to buy a house. Right. So it's like that spring market that we normally see, we're starting to see kind of a pickup now. So I think, like alluding to what Kristen said, is that we're going to see a little bit more active summer because we have that pent up demand.
Yeah, I think if you think through the psychology of that, tariffs, news, like just kind of makes people pause for a second.
Sure.
Yeah.
I feel like that's what happened this year, right? And now they kind of go, I think we're okay. We're going to keep moving forward. Is that what you're saying?
Well, and that's where our job comes in, where we need to actually look at the data, right? So if people are hesitant and they're pulling back and they're hearing headlines that may be false, may be true, that's where you start to look at the actual numbers and you start to use those to try and reassure. Right. I mean, yes, we saw an increase in inventory from March to April. However, we also still saw an increase in the median sales price. Sure. So the sky's not falling. And that's where I think the data is important to actually point out to the consumer, to your clients, to other real estate professionals, so that they can share the facts and keep the panic at bay.
Yeah, the federal government wants home appreciation to be around 4%.
Right.
Right? If we think back, I remember, because I'm a big numbers guy, my background's in economics, I remember tracking home prices in 2021, right? Kind of that post-COVID. And Paul, I remember you and I specifically having a conversation. I'm going like, it's 19% up year over year.
Yeah.
So I think one of the things that I always think about that, which is great for the homeowner, that's not sustainable. You will never have any buyers for properties that get that expensive. And so I think more than anything, we're still seeing like some good appreciation numbers.
Of course.
It's just with this short-term thought process of like, I remember what it felt like to make 18% in a year.
Yeah.
I mean, if I had money in a stock market and made 20%, I can't expect that to be year over year.
Right.
Or we're going to wait for the crash to happen right behind it. Does that make sense?
And it feels so different to a consumer or to a seller, let's say, going from an increase in market value of 10 to 15% to a normal 3 to 4%.
Right.
You feel that.
Sure.
You feel that differently. So it's our job to kind of put that into perspective.
Right.
Like, that's not sustainable. That's not normal. Yet, as a seller in this market today, even if you're only looking at a 3 to 4%, you've still benefited from those previous years.
For sure.
We just have to understand you're likely not going to continue on that trend.
Yeah, I think, along those lines, when we talk about inventory levels, supply and demand, I typically consider a 3-month supply of inventory to be a balanced market, generally speaking.
Right.
We were running at 14-day supplies. That's why we're getting 20% increases, is because you're getting 12 contracts,
right,
bidding wars,
yep,
waiving every contingency possible, giving your firstborn child to get a house.
Yeah, sure.
And so when we think about is the sky's not falling.
Sure.
Okay.
Right.
Now our inventory levels have moved to about a month and a half supply.
Right.
Okay. Well, that's still undersupplied.
For sure.
And so, but we have to get that mentality of the seller to understand it's still a seller's market, but you can't expect these bidding wars, and you have to price accordingly now.
Right.
So it used to be my neighbor's house sold for $900,000. Well, I have the same house, and I'm going to list for $950,000. We can't do that anymore.
Right.
And that worked before.
Right.
Now it's like, if I have the same house and that one just sold for $900,000, my house is worth $900,000.
Right.
And it will sell.
Right. Those of us that have been in the business a long time, when we talk about inventory levels, I think over 30, 40 years, they've come up with this number of like 6 months of inventory is a balanced market. I think that's what everyone's taught. Talk to me a little bit about, you said 3 months to you is kind of a balanced market. How do you look at that? And why is it there versus 6 in your opinion?
I think that you're starting to get, when you're around the 3-month supply, we're getting to normal transactions. You don't have to, a seller, if they're priced right, doesn't really have to negotiate on their price.
Right.
They may start to see some of these contingencies come back into play, home inspections, appraisals, those types of things. And so it becomes more of a traditional transaction.
Right.
I think as people were taught that 6 months supply. I think when we get to a 6-month supply, there's a little more negotiating going on.
Heck yeah. Yep.
And so there's a little more, give and take, so to speak.
Right.
And so that's why I think I use 3 months because I feel that that's where we can kind of hold our ground to a degree.
Right.
And then if we getting to 6,
right,
I think we're tipping the scales a little bit.
Kristen, I think one thing when I think about that is a seller in their mind might go, I'm not making as much as I would have if I sold a couple years ago. But one of the most common objectives we hear, objections rather, that we hear around selling your place is you can't find a house to buy and go to, right? So getting to a 3-month marketplace, 4 months is a really good thing for everybody in the market. Again, you might be able to max out your sale, but then you're moving into the basement with your kids, right? So don't you agree that this 3 month of inventory is a good place for us to have transactions, have buyers and sellers both have equal opportunity in the market?
Probably lean a little more towards the 4 month just because I work with buyers as well. Paul focuses mostly on the listings. His business partner, handles a lot of the buyer side. So as somebody who handles buyers frequently, I like the 4 month idea just because it gives us some time. It gives us time to schedule all of these showings and not have to go on Thursday when one is available and Friday when the other and Saturday when the next. You can plan your weekend, check off 7 of them, and then have some time for the buyer to actually think through what they want to do. Maybe even negotiate a little bit. There might not be a lot of room because in the grand scheme of things, the numbers still tell us that things are competitive and there's not a lot of inventory, but at least it gives a little bit of time to pause, chat through, gather your thoughts, get your ducks in a row, and submit a nice, strong, solid offer.
Well, because at the end of the day, we're a fiduciary.
Right.
And I think that what we have to look at in our line of business is, I would argue that a high percentage of most people's personal wealth is the equity in their home.
Sure.
And so as if someone's a financial advisor, they have to go through the rigorous exams, so many regulations, all of these things. Well, we have to look at, we are their financial advisor for their home, and we're talking $1 million transactions. How many people do $1 million transaction in their personal life on a normal basis?
Right.
And so being there, helping them, guiding them, making sure that they're making the right decisions and not regretting the move.
Right.
And, I do believe that we should act as the financial advisor for their real estate portfolio.
Right. And so you sit down in order to accomplish that goal. Well, really quickly, I want to say one thing.
Yeah.
We talked about headlines a second ago, and you talked about stats can fit an agenda. So when we hear these, one of the things I keep hearing on, the radio, I guess I won't call anybody out, is, we've seen a 33% rise in inventory since last year, and sellers, but you have to realize that when it's so low, a 30% gain is negligible.
Right.
So that's a great example of fitting the narrative where it's still super competitive out there, right? You have nice properties in good condition.
Right.
Kristen, working with buyers, you're still in there fighting
Yes.
to get good contracts
Yes.
on good properties that are in good condition.
Yeah.
Absolutely.
When there's 3 houses on the market, a 33% gain means there's 4 houses on the market.
Sure, exactly. What'll be interesting to see is
Well,
the remainder of this decade, because I've been in this business now 15, 16 years. I'm starting to look at long-term trends, and I've now seen it a couple of times. It'll be interesting to see where we settle in the next couple of years, because we had some crazy economic levers that created these situations, and I think we're kind of starting to get back into a little bit of a normalcy in terms of a marketplace, right?
And that's a good, I try and use that word often, normal. We're starting to see a little more normalcy. What we saw for the last 4 years, I don't think anybody would describe as normal.
Sure. Yeah.
With the increases and the demand being so high.
Right.
So I like the word normal. I like to try and use that word.
Yep.
And when you look at the projections for median home prices, they're projected 3 to 4%. Right. That's what somebody would constitute as normal.
Right.
So I like that word.
I think this business, there's a lot of agents, right? And I think that one of the things I'm most proud about our company is we have a lot of really good professionals that take fiduciary responsibility seriously.
Yep.
Talk to me about what makes you guys stand out against your competitors. Why do your consumers come to you, right? I think if they have a conversation like this, they start to understand that you guys know this at a super high level. But talk to me a little bit about maybe your value proposition and your kind of your place in the market here.
Well, I think I try and I started my career in education, so that's the route I take in my business. I take an educational approach. I'm not here to make decisions for anybody, but I want to give them all of the facts and all of the data so they can make the best choice that they can for their family in that particular moment. And it might be very different from one client to the next,
right,
what that choice actually is. So I think just sometimes it's hard having conversations when you have customers and clients spewing data they've heard or headlines they've heard, and it's hard to tell them that's wrong.
Right.
So finding a way to make them understand you're authentic and you're coming from a good place, and it's mostly full of facts and data, and putting that back on them as far as it's their choice. Mm-hmm. I'm not here to skew you in any way, shape, or form. It's your choice. I just want to make sure you have all the tools to make the best one.
Awesome.
Yeah. I think I just want to be highly educated in my field and know all the data. A home buyer, it's somebody's home, so it's a very emotional situation for them. Mm-hmm. And so what I do, it's not my house,
right? So
I'm going to come at it from not the emotional level, it's from the guidance level.
Right.
Okay, these are the numbers. This is where we're at. This is what there's, and it's kind of funny. You could say, somebody may pay more or have, I might say, hey, the market says the house is worth this.
Sure.
But you know what? If you're going to live there for 20 years and raise your family and you're willing to pay a little bit more or
for the
whatever.
Moment, not for the market.
Yeah.
100%.
Yeah. It's but this is where my advice is. And then it's on them. Just give them the facts.
For sure.
And then try to help them and then represent them to get them to where they want to be.
Or double tap on what you just said there, because I think facts take your opinion out of the situation.
Correct.
Right? So when you're going into a situation where you're there to advise and you're there to give them all the data,
yep.
You two are some of the most data-driven agents that I know of that, again, this is not a super emotional conversation on my side. My job is to give you the information.
Yeah.
You make the best decisions that you need to, not, I think this will go this way, I hope it'll go this way.
Yeah.
Then the agent takes on a lot of responsibility of you better be able to do what you say, or you dictate and look at the marketplace like a lot of us do.
Yeah.
Well, and I'm not going to advise my client to do anything I wouldn't advise myself to do.
Sure.
Correct.
And that's what you have to have, the empathy of what they're going through and the emotional side of things.
Right.
But at the same time, this is not about, my business is not about this one transaction.
Sure.
My business is about the 5 people that they refer me to because they know I'm the best at what I do.
For sure. And I think even going beyond that, I think some of the things I'm starting to watch you guys do is look at, equity and have conversations year over year to just update your clients consistently, like you had said, around a financial advisor.
Yeah.
I think that's something I really enjoy. I met with a neighbor the other day who has 50% equity in their home, and this is just an example. They're still paying mortgage insurance.
Yeah.
And I'm sitting there going like, what are we doing here, right?
Yeah.
And so I think starting to take this advisory role where I'm not claiming to be a lender, I'll get you to the right people, we'll do all those things. And yet years and years can go on where we as advisors can be even more beneficial than I think than a lot of the agent base really realizes. And if you take this approach to business, I think you can take a deep breath. You can run a great business with big profitability. You can go on vacation and enjoy your family and friends.
Sure.
Because you're running a business. You're not just making up things as you go along, and then that pressure starts to build on you on the back end.
Yeah.
Yep.
Yeah.
Right. Right now, market conditions, we do see some increase in inventory, but I think that's a great thing for everybody overall. We had talked about some of the lines around like interest rates and things like that.
Yeah.
We're still kind of holding steady right now.
Yeah.
And I would say to everybody out there, I don't expect much changes this year, to be honest with you. I know inflation's under control, and that's kind of the thing that they talked about on the front end.
Yeah.
Unemployment is low. And as long as that's in control, they feel like there's a marketplace to keep the rate at where it is. Mm-hmm. I think that's where we are.
Yeah.
You just mentioned it. I always like that saying of, you're buying on top of the moment, you're never buying on top of the market.
Yep.
Kristen, you had said you looked at some data, 7 years over a set period of time?
75 years.
Right.
There's only 7 years out of 75 years that the market actually decreased.
In value.
Right.
Right.
So, and it's always more than recovered.
And then exactly that. And then recovered, and if you...
And some.
Right. So we had talked about it. If you're buying for 1 year, make sure you're making good decisions with a lot of data. Paul, you just mentioned, if you're going to live here for 20 years and raise your kids and it's your dream home, make it happen, right? And move forward with your life and the vision that you want to have it there.
Yeah.
But
right?
I love that. I love that little saying right there, because how many times do you run across clients who are like, are we being stupid right now buying at this? We feel like we're buying at the height.
Right.
It's like, well, if you look at the trends over 75 years, sure, you might be buying high in this moment,
right,
but you're never buying at the top of the market.
Right. Good. Outlook for the rest of 2026. You guys feeling pretty good about where the market's going the rest of this year? Any major concerns that you're talking to clients about right now?
Not really. Actually, I think we're starting to, some of those fears, like we mentioned, that we saw, I think they're starting to subside.
Good.
And we have a strong market.
Yeah.
We have low inventory levels. Yeah. And are we getting to, decent inventory levels? Mm-hmm. We still have very high employment, low unemployment, high incomes in our area. Yeah. The fundamentals are there. The fundamentals are there.
Projections are there. I mean, even the projections of the median sale price increase, the projections of the federal rate cuts, the projections of unemployment, and of inflation, they're all in favor of positivity and growth.
Right.
For sure.
I mean, my take is, if you have a question about real estate, like any of my clients,
right,
call me.
Right. Sure.
Don't read the newspaper.
Sure. We'll just call and have a 30-minute chat on the way home from work, and I'll fill you in on everything you need to know.
Yeah. What was interesting is, I mentioned, in early February that the client sent me that article about that. Because they know I'm a data guy.
Right.
I was fielding at least 2 calls a day through, March. What's going on? I was like, just calm down.
Right. Yeah.
Everything's.
I wish he'd share all of that data with me sometimes when I call. He saves it for all his clients.
He's got it saved up there. Well, guys, I think this is a really good conversation. Maybe we can go another 6 months. We come back and do it again. Let's see what the second half of the year ends up looking like. Tell people where they can find you, either agents that might want to connect with you and brainstorm, learn from what you're doing. I know we're, at the Keller model, we want to share everything we got outside as well. And then even clients, if they wanted to reach out to you, if they saw this in some capacity, how can people reach you?
You can reach me on social media, Kristen Develli, or at KD Realty Group. I'm on Instagram, Facebook, LinkedIn, or you can email me, Kristen, Kristen, at kdrealtygroup.com.
All right, Paul, what you got?
All right. Direct communication is great.
Yep.
So email, it's first initial and the last name. So that's PBEDEWI at kw.com.
Probably the best way to do it, right?
Best way to do it.
We'll put the text on the video screen, so if anyone needs to grab that or capture it, we got it on there.
Whatnot. I'm
cool.
I don't do social media.
That's all right. Everyone does it differently.
Doing it today.
You can Google this guy and you'll find him.
Yeah.
Kristen, Paul, Thanks for spending some good time together here
Thank you,
today.
Kyle.
Yeah.
And I hope you guys have a great summer, and we'll catch up here in a few months.
Pleasure to chat.
All right.
Awesome.
See
Thanks,
ya.
Kyle.